Hello and welcome to this latest look at the week ahead. A good place to start this week is US stocks, as we've seen further gains in the US stock market of late. You can see here the US 500 or S&P 500 has pushed above the 2,900 level to trade at its highest level of the year. This has extended the remarkable recovery that we've seen going on since the market bottomed out last December, and price is now just over 1% from its all-time high of 29.46, which was set back last October. In terms of trend identification, their 8 and 21 EMAs have done a good job of catching the trend for this market. You can see after we got this positive cross here back in mid-January, the market has continued higher and these have remained in a positive orientation throughout. And as I talk now, price is above the 8 EMA, which is also above the 21 EMA. In terms of possible support, if we do dip back lower, 28.65 could be an area of interest to keep an eye on. And below there, if we do see a deeper pullback, then the gap high from 28.40 does remain unfilled, so that could be an area to keep an eye on. Turning our attention to FX, the Euro GBP here on a weekly chart, you can see the last couple of weeks there's not been too much activity in this market, but price has drifted back up higher towards that 0.8720 mark, and this could be seen as potentially key resistance after previously acting as support for quite a long time. In terms of the downside, lows around 0.8745 could be worth keeping an eye on, and just below there we have the 200 SMA on a weekly, which would come in there. If we do see further declines here, either on the back of GBP strength or Euro weakness, then we could push down even lower to this prior support area, which held quite nicely back in 2016 and 2017 around 0.8315. Switching over to commodities, we got a big decline in the gold price last Thursday. You can see this large red engulfing candle took out the last 3 days of gains, and it also coincided with the top of the Ichimoku cloud here around 1311, so that heightens the possibility that this could be seen as an area to keep an eye on for potential resistance. The Ichimoku cloud itself has done quite a good job of capturing the trend over the past year or so, and you can see after we dropped down below it in 2018, we had this prolonged period of a sell-off, and after we got back above there, coming into the final quarter of 2018, we did see a nice move higher. We are now back below here, although it's worth pointing out that this break below has not been quite confirmed yet by all the lines, with the lagging line here still in the cloud. Looking a little bit more closely at the recent price action, you could possibly identify a head and shoulders pattern here. You can see the first shoulder there, second shoulder there, and a head up at the highs around 1347. And the all-important neckline could be seen to come in as this rising trend line here, which would currently come into play somewhere around the 1287 mark. If we do get a break below 1287, then 1277, these lows from back in January could be seen as possible support, but if we do drop below there, then there could be further declines all the way down to 1250. Another market in the commodity space which I want to talk about is WTI, or oil.WTI on XStation, and you can see this market, similar to US stocks, made new highs for the year last week. Price is back above the 61.8% fib of the drop seen from the highs around 76.78 to lows of 42.50, and this is also quite a nice swing area as it had previously acted as support here back in 2018. If the price does remain above 63.69, then there could be further upside ahead, with possible gains taking price even as high as 78.6 at 69.45. But if we do drop below 63.69, then there could be a deeper pullback towards that 50% fib at 59.64. Okay, thanks for listening, and best of luck if you're trading these markets this week.